is this something which is real market strength or some sort of dead cat bounce which happens?
We are living in uncertain times. Chaos, volatility is like the new normal for the markets.
Right.
Trump is going to be the most sensitive precedent to any stock market decline. The only two stocks out of the max 7 that are showing positive gains.
Wow.
On a YTD basis.
Wow. Hello everyone and welcome to Century Conversations, where we break down the market noise and bring you what really matters. My name is Yogesh, trainer, trader, and your guide for the next few minutes. I have with me Bhavik Mehta, Deputy Head Research of Century Financial. He will be opening the vault of knowledge and will tell us about what's going on in financial markets and how to navigate through the volatility. Bhavik, thank you so much for taking out time and welcome to the podcast.
Thank you, Yogesh, for having me.
So, Bhavik, I think there's one question which is going on in everyone's mind. The April 1st week, the infamous market dip, the uncertainty of the trade tariffs which brought stock markets down. And I know I went through a lot of sleepless nights like everybody did. So that stayed for a while, but then it just bounced back. Now everybody wants to know, is this something which is real market strength or some sort of dead cat bounce which happens?
Well, we are living in uncertain times.
Yeah.
Chaos, volatility is like the new normal for the markets.
Right.
See, what has happened is there have been a lot of changes in the global political investment and the operational climate as far as, how nations are reacting with each other, how they are dealing with each other.
Right.
So this was something that was bound to happen. Election of President Donald Trump has rightly pointed out the big, I would say, cracks in the market that have arisen.
Yes.
Now, what that has done is it has not only just given a lot of volatility, but it has provided big opportunities to the global investment community as well.
Absolutely.
So whether you're talking about big stock gyrations, big volatility
Yes.
in equities, fixed income, everything is going through a big monumental shift at this point of time.
I think, Bhavik, we have seen this trade tariffs and the news about it, the tweets about it, we are not very unknown to this. I think 2016, it had a pattern. There were tweets which would come and then eventually markets would bounce back. And this time also, we saw a lot of news coming in and then we saw markets going down and then it bounced back. Was it really due to Trump being pro-business or investor being very optimistic, or earnings maybe? Do you think earnings season played an important role in this dip?
Two things. 60% or 50 to 60% of the US investor saving wealth is tied to the equity markets.
Right.
Let us for a second leave aside all this, volatility regarding what Trump is going to do, what he's not going to do.
Yeah.
Trump is going to be the most sensitive precedent to any stock market decline.
Right.
Because 60% of the savings, the US investor savings, is tied to the US markets. So what this is going to do is, irrespective of cutting across all the party lines, whether it's a Democratic voter or a Republic voter, he has to take care that the markets do not dip in a very large proportion. So this is where we saw this tariff policy reversal, 90-day pause. He's going to start some kind of trade talks with China. This is where all these things are coming into play.
Right. And I'm sure a lot of our viewers have been in that roller coaster where we saw the portfolios coming down and then again markets moving higher.
Right.
So I think just to wrap up this segment, I would want to know, is this a good buy on the dip, or the investors really need to be keeping one eye open at the exit as it falls down or if something goes wrong?
Well, I would say the need of the hour is long-term investing, right? So when you talk about something like long-term investing, we always talk about the concept of dollar cost averaging.
Correct.
Trying to put some exposure to some funds whenever a big market decline has happened. That is always going to be the case. It's going to be the case for this year as well, for next year as well. Specifically with the volatility coming on from the US side,
correct,
investors need to keep their eye open as to what the market reactions are.
I think that's very smart because we always hear to do something positive. We always plan to hear something positive, something more bullish. But that's what you said is really, really important, that we still need to keep one eye open at the exit if things go south. You need to diversify a lot. And I think this is a very common mistake which a lot of new investors would not do. But that's very much possible because sometimes it's the positive sentiment which derives it. I was reading and I was collecting some facts, and here's a number that really made me sit up. Over 88% of S&P 500 stocks are trading above their 20-day moving average, and that's the highest since we have seen August. Now, I think, is this a momentum rally, or is this that kind of optimism which let investors go very reckless? Or is this something which is actually a momentum rally? Is this where the markets are going to? Or it could be a very crowded zone, or things could go south very quickly. What do you think about?
Well, we started the last month, that is April, with a very negative sentiment.
Yes.
So, it's a human mentality that we live on hope.
Yes.
We live on fear, we live on greed.
We do.
We all are here to make money, right?
Absolutely. Yeah.
So the skin in the game is like, we need to understand that wherever there's a positive news coming out, people want to jump into it.
Absolutely.
We want to buy the dips. So that is what has basically happened with the current leg of the market rally.
But I think the numbers are staggering.
Right.
I think 88% of the stocks, like 9 out of 10 companies showing positive above their 20-day moving average. Which sector do you think is leading this? Do you think tech has something to do with it? Or do you think it's a tech rally that is the reason why it has been going higher?
Well, tech has been the investor darling. So,
Okay.
The last 10-year market cycle, it's again going to play out. So contrary to the popular perceptions, most likely, again, we are going to see a big performance in the AI and tech names. So the US big tech companies, look, these are the brands which investors are able to relate to their day-to-day products and services.
Right.
We carry Apple phone. We order something online on Amazon.
Use Microsoft Excel.
We're going on Insta. We're going on Google. We're going on Facebook.
Absolutely.
Tesla is there in UAE.
Netflix accounts, why not?
Netflix accounts.
Yes.
We are driving the Tesla cars.
Yes.
So the brand remembrance value is a very big thing
higher, yeah.
as far as actually buying the stock is concerned.
Right.
Now, many people often lay about the bare fundamentals, technicals, PE averages, and everything when you talk about the stocks and all
Yes.
that. But for me, if I'm using a particular product, I'm more closely able to relate to the brand, right? So if I'm buying an Apple phone, I know that this company has definitely big amount of revenues.
Right.
So this is where I feel the investor darling status, like the most cash-rich companies, is going to stay alive for a couple of years for these
That's
companies.
good. So let's zoom into this tech area. And as you said, repeatedly, the darlings of Wall Street, I see that Meta, as we knew it as Facebook, and Meta and Microsoft both have started returning to that phase where investors would be very attracted to these companies.
Right.
Now, what do you think fundamentally about Meta? Because they have honestly burned a lot of cash in their virtual reality projects. But to be honest, I feel that it's the ad business which is bringing a lot of revenue. But what do you think has changed in Meta and Microsoft that has led to this investor sentiment going more and more bullish in those companies?
So if we talk about this year's positive performance specifically across Microsoft and Meta,
Yes.
so by the way, for our viewers, these have been the best performing stocks. In fact, the only 2 stocks out of the max 7 that are showing positive gains
Wow.
on a YTD basis.
Wow.
Number one reason, of course, you're talking about the cash flows, good earnings,
Yes.
but huge decoupling from China. So stock like Apple, Amazon depends a lot on Chinese-based consumers, Chinese-based products. So not that both these companies do not have any consumers in China, but what we're trying to say is the supply chain reliance for Apple, Amazon is more if we compare them to stocks like Meta and Microsoft. So this is where you're seeing a positive outperformance across both these stocks.
And that's a really important information,
Right.
Bhavik. Thank you so much for that. I mean, that's a really important information that within tech also, Facebook and Microsoft, as they decouple with China, it's really important because a lot of investors would think about this during trade wars, which companies to invest in, which not, and it's a really important piece of information.
Right.
Can I also say that because of the reason you highlighted that tech has become cash rich, and can we say that it's becoming more reliable, it has more quality in it? Do you think tech is the new safe zone for investors now?
Definitely. So that has been this, as I've just told you, that it's been the market cycle since the grand crisis of 2008, grand financial crisis 2008, right? People want to invest in company where, actually the products are being built and sold, product or service, right? So you're talking about a company like Apple, which has something like $98 to $100 free cash flow per year. You're talking about Microsoft that has announced capital expenditure plans of around $80 billion a year.
And doing so well with AI. And
so doing so well with AI, cloud computing and all that.
Absolutely.
So what really happens is, if you have that kind of operational capacity, if you have that kind of cash reserves, the investor is bound to go for that companies. So you have the solid fundamentals, you have their monopoly on the markets. These are the companies who can simply buy out any kind of startups.
And that shows real growth.
Right. So let's say you're going to have some emerging new AI-based technology, probably some company sitting in India or China that comes out with some technology.
Right.
Microsoft, Apple always has that cash in its pocket to simply buy out that company.
Very nice. So to sum it up, if we say that we have gone higher much from the last dip, which caused the stock market crash, I think investors have shown positive optimism and resiliency. I think we can also say that the 88% of the companies which are in S&P 500, which are trading higher than their 20-day moving average, it really shows a momentum which has been brought in by the investors.
Right.
I think tech companies and earnings have an important role to play in it.
Right.
And I think for a reasonable investor, it is important to be cautious, to be diversified, and to make sure that every single investment or trade which is being done is done with thorough research. I think research plays a very important role. Bhavik, before you leave, I would want to understand how's an average day passes in the life of a researcher, because I know that you have seen more charts than people look at their WhatsApp chats. And I want to just know quickly for our viewers that how is an average day in your life when you start your system? What do you look into?
I'll be very frank with you. Contrary to the, like a layman's expectation or a, image of a research guy being very complex,
Yes.
not easy to talk to and all that, I'd be very honest with you. It's all about getting focused on that particular thing. So whether it's charts, whether it's fundamental reading, it's more about how closely I'm aligning myself with the markets.
Wow.
So I would say the number one thing that is required is being very proactive, very agile,
Okay.
leaving aside all the fundamentals, technicals. If I am involved with my work, if I know what I'm doing, then only I'm able to pitch that product to the sales guy or to a consultant, to an advisor. So that is what basically, to me, defines a research guy.
I think that is something which we really have to look into, and it's not an easy job. And more than that, it's very difficult. I'm sure it was very difficult for you to get out time, but you still did. So once again, thank you so much, ladies and gentlemen. This was Bhavik Mehta, a Deputy Head Research, Century Financial, was with us, and he shared some very valuable insights. And thank you so much, Bhavik,
Thank you.
for being here. My name is Yogesh, and we'll see you on the next episode with a different topic. Till then, trade cautiously and have a great investment week.